First, I want to thank Capital Link for arranging this panel and for having all of us. We are going to discuss a very interesting topic today with three very distinguished panelists. First, I want to introduce myself. I'm Guan, Jian. I'm a partner of Fortson, Farley & Williams Hong Kong office. Today with us, we have Mr. Pankaj Khanna. He's the CEO of the very successful pool manager named Heidmar Incorporation. Okay? And then we have Mr. Xiao. Xiao is the managing partner of Equator Fund. And then we also have Mr. Kenneth Lam. He's the founder and CEO of SeaKapital. Today our topic will be about investing in shipping. And we are going to explore and discuss three very interesting, I would say, structure. One is joint venture. The second is merger and acquisition. The third is more general. It's the other industry consolidation. And first, I want to maybe raise a general question to the three panelists here. What key trends do you see driving the investment in shipping today, particularly regarding joint ventures, merger acquisitions, and other industry consolidations? And how do these trends influence your organization's strategy in funding and also in investment? Maybe we go with you first.
Yeah, so look, I'm from my own standpoint, Heidmar is a services company. We do technical management and also commercial management. I took over this company with a management buyout about 4 years ago, and we have mostly had some organic growth, but then I did a M&A transaction with the Capital Group and increased my fleet and doubled it at the start of 2022, which was a critical time. Timing was great. So we went from 30 ships to 60 vessels. That drove further growth in Heidmar. So we went from 30 to 60. We took delivery of over 100 ships in the last, in 22 and 23. So it's been, M&A allowed us to build out the platform. Recently, we also acquired a small technical manager based out of Hong Kong. So M&A has been a critical part of our growth strategy. We are about to list on NASDAQ. We are at the final stages of listing. We're doing a reverse merger. We expect by the end of the year, maybe early next year, we are listed. And that will drive further growth. So M&A has been a key tool in terms of driving growth for Heidmar and will remain one of the key tools as well. Especially on the services side, scale is important. This is one of the reasons for growth. It's not growth for growth's sake, but we need scale both on the technical side and on the commercial side. So that's driving our push for M&A. Organically, it takes a very long time to do it. And why scale? Because we have our customers asking us for solutions on decarbonization, asking us solutions on the technical side, which require bigger organizations, require efforts in terms of finding bespoke solutions for decarbonization. So you cannot do that with small organizations.
Thank you. Thank you. Stephen, please.
Well, yeah, good morning. Thank you for your patience with us because it's approaching lunchtime, so I will try to make it quick. So, well, Equator Fund actually is, it's based in Shenzhen, the other city, crossing the border. So we are managing the industry policy funds representing Shenzhen city government. But we, by nature, is a PE fund, so we are open for LPs, from the resources from the, maritime, ecosystems, any partners, something. So while we view this word, there are certain, major trendy things, we are really concerned about. Number one, of course, is the as an industry policy fund, the politics actually, political, factor will come first. We need to think about, geopolitical, conflicts, we are very concerned about what's happening between China and USA. Whether especially when Donald Trump come into board for the second term. We believe that he is going to be very continue with the extremely oppressive policy against China. And China, after 4 years and even 8 years actually, after Donald Trump first term and Biden governments, I think China is quite well trained and stand up. So the confrontation may be more severe, as we see. So that will bring certain big uncertainty to the trading and shipping markets in tandem. The other thing is, of course, is well known is decarbonization. It's I think this morning we talked about a lot on this decarbonization. But decarbonization actually means what? Means cost. Means additional cost. Means additional investment for ship owners, also as PE as investors. So we are concerned, whether this is possible for us to recover this additional cost from the existing and future freight return. So, of course, somebody, we are also thinking about whether we can, invest in certain, paper, carbon trading paper. But unfortunately, we don't have that much instruments in international market. It's not consolidated. It's quite, separated and disparated in the world. So we're still looking into this one. The other thing I think is new tech, application to shipping industry. Luckily, the fund is headquartered in Shenzhen. Shenzhen, as you know, is a burgeoning in the technological, and innovation, base for China, even in the world. So we see a lot of new innovation technology. So whether this is possible for us to incubate some, innovators, and see how much, to what extent this kind of technology can be applied to, shipping assets. Of course, at the cost is concerned, so must be very much cost efficient and effective, something. So this is an area, a trend which also we are pay attention to. Last but not least, I think it's the currency issue, exchange issue. We are concerned about the US dollars and RMB. It's clear the RMB. We see the rise of RMB. For shipping assets, but unfortunately RMB is not freely exchanged. But US dollar, still very strong, but I think it's deep in our hearts. We understand US dollar is going to be weakened. If you look at yesterday, actually, we see the publication from the US Federal Reserve. It's a national debt. US national debt is reached already, surpassed, I think, 36 trillion US dollars. Bottom of our mind, we know the government will never pay back. Default is that systematic default will be there. But that's why we need to balance whether how much we need balance from the short term and long term, medium term, how to diversify our assets, shipping assets denominated in different currencies. The other thing I think is regarding currencies. I think the Hong Kong dollars maybe play a bit more role. Not so many discussions about this one, but from our perspectives, Hong Kong dollars, success and inefficiency actually attributed to its packing system with US dollars. Because if you have packing system, people go for US dollar, assets. Why do I choose Hong Kong-based dollars? But suppose something happen in the future, Hong Kong dollars can be overnight, packing, and maybe Singapore dollar could be a very good, example. I mean, dirty floating, packing to a basket of currencies. Even that will be or even have more relevance to RMB, because RMB assets is not freely held by the shipping companies. So why don't we go for Hong Kong dollars? If Hong Kong dollar can provide a very clear and certain linkage with RMB, something, why not go for Hong Kong dollars? But of course, I don't see Hong Kong is ready for that. So, but hopefully we can see more in the future. Yeah, I think I said too much. Yeah.
Thank you. Thank you. Kenneth, please.
Yes, thanks for having me. So first of all, regarding investment, I'm seeing a lot of familiar faces, and most of you know that I have been a banker for 30-odd years, and I have moved to the bright side to become owner with a ship owning and leasing company started last year. So whether wearing the hat as a banker or as an investor, in terms of investment decisions, actually, it's all going back to the fundamentals. Basic supply and demand. Why do you think that type of ship would have a future? You want to invest into the future. So these days that were probably, it's just not, the market forces, but also regulatory forces, and the ESG definitely play a role. But ESG, decarbonization, it is not going to, it's not the first time, and it's not going to be last. So those are just factors, going into our investment decisions. So basic fundamentals always prevail. So on the question regarding joint ventures, M&A, so again, back on the fundamentals, shipping is a very capital-intensive industry. So in accordance with the latest numbers, the world fleet is now about $2 trillion with 1.55 trillion on the water and 450 billion being built. And we all know that, being in shipping, the new wave of ordering, owing to the new fuel technology, hasn't really come yet, right? So driven by necessities, there's a need to combine the resources. Consolidation in the industries, we see it time again, with the container industries, the first one that has been doing, for years. Lately, we've also seen, say, the likes of Star Bulk, Eagle Bulk, and we see, say, the Safri's family getting back to, the control of Euronav, but also, there are also the exercises such as the Oak Tree divesting from Fleetscape to the overs. So those are quite, different, exercises, but also showing that, market forces, always prevail. And when people think that, they need to divest, when people think that, there is a way that they can make more synergy and can have a better business proposal by acquiring, they will continue to do so. With scale, I also agree, with our speakers before that. One thing is that with scale, the ship owning side is becoming ever closer, to the cargo side. This is a trend definitely definitely happening. The market also is, you see actually less, longer term employment contracts. It makes owners, to be more compelled to make sure that, they have the scale so they can work together with the cargo owners. Actually, on this front, so being in Hong Kong, maybe I got to sell this a little bit. So Hong Kong is the international shipping, finance, shipping, and trade center. So for the longest time, Hong Kong, being based, here as owner, we know that, by having the right stability measures, policies to create the legal, tax, and regulatory stability, owners will come, and the rest of the maritime cluster will come. It's more the maritime cluster, of course, have involved the finance side, the management side, the ship management side, and all that. But lately, it is also there's a firm emphasis that the trade side has to be closer and closer involved. In the last couple of days, also with the ICS summit, being held in Hong Kong, WTO is also a part of it. And we, in this interesting, challenging world, I think as a force, as an industry, I think we would have to together continue to advocate a free market, advocate, a market that we can understand, advocate a market that come up with the standards that we can all come up with, including the new fuel, so that we can follow. And with this, I think we would have a chance, of providing the sustainable capital into this very capital-intensive industry. And to answer your questions, all these M&A joint ventures are driven by all this necessity.
Thanks a lot. Thanks a lot. I think from my perspective, I also see that one of the elements, as you identify, Pankaj, that we see cooperation model of different players in the shipping market. say, for example, managers, they used to just sign a management agreement with the ship owners, but now the managed service more in certain structures that we do is embedded in the joint venture structure. So I think the relationship getting closer is also what, as a law firm, Watson Farley Williams, we have seen in the market. And I think in the discussion, all of you also identify certain, I would think, challenges in the shipping investments. So my next questions will be, in light of the, how to say, like Stephen, you mentioned the geopolitical tension. You all mentioned about the technological advancements, okay, also the regulatory changes. With all these in mind, what do you believe are the critical factors for a successful investment in shipping industry? Maybe Kenneth, we go with you first.
Well, I think successful investment, we got to look into why we are why we're in shipping, perhaps. So if I made so for the SeaKapital, we basically the ship owning and leasing company. We would do both finance leases and operating leases. I think our business model is flexible. We would always provide a layer of capital to make things work. So in finance lease, in short, it could be deemed as mezzanine layer, although we would own the assets. In the operating leases, of course, that would be the equity. So we have to generate the return. And when we look at finance leases, I can just wear my banking hat, in the old days and continue to do it and rely on the counterparty risk, to mitigate, the challenges that we might face. But one thing is, in order to make sense, of of investment, you have to provide the flexibility that we can also do operating leases. And in my case, in doing operating the leases, I would need a very good ship manager, ideally. But very lucky, for us, not even we don't even have a good ship manager. We actually have a partner in the CON. That is working with us. All of a sudden, we have a lot more confidence in the building up our operating fleets. I mean, i.e., most of the contracts would be in the time charters, so that we can generate the yield that we want. We are a yield play, plus hopefully equity, the upside, with the right management of risk. So we got to identify, why we are in shipping. We provide capital to own ships. So our partner in this case, their roots is in ship management, and of course, they give the expertise so that they can be involved in ship owning as well. So I think there are situations like this, that would drive us, together. Maybe I'm just, giving one example, of how the world has changed and how important it is, to have operating expertise on our side that would drive, capital even closer to the operating part.
Thank you, Kenneth. And you mentioned about the JV with CON. It's actually on the news. We also hear that, and we have limited time left. Maybe we can explore that later. But Stephen, please.
Well, I think in this room we got a lot of talents, a lot of wisdoms in this room. So regarding success factors, for me, I think the first thing is it should be the awareness of risk. Well, if you look at the freight market, it's unusually high. This morning, I think Wang Yongxing, as a keynote speaker, mentioned how to overcome the cycle. If the theory of a cycle is really stands firm, then we see if all these unusual conditions, for example, the war, conflicts, disappear sometime or suddenly, the cycle will tell us is going to be deep down, the whole market will dip down, to the bottom. Then we are talking about sustainability a lot today. Maybe in a few years' time, we are talking about survival. So that's a shipping business. Well, that's why we should be mindful of this risk and a cycle issue. And also some black swan, also some unusual factors which affect the markets and freight. And now we are sitting here talking about sustainability. Actually, we may have a survival issue in the future. So That's the first thing. The other thing is, of course, we need to ride the trend, right? Because there's a lot of restrictive policies. There's, of course, a kind of moral, pressure, how to improve the environment, right, for the humankind, something. So we need to go for decarbonization. Therein, we need to also apply the technology, something. So if the shipping companies, when you're focusing, traditional ships assets, we need to also think about some applied new technology, also environmental friendly technology to be applied to the new buildings. So this is also another critical factor. The other thing is, one thing is in tandem with what's happening, in geopolitical, tensions. Whether we need to diversify our shipping assets to among the region, maybe if all the vessels go, supposed to be globalized, would you go into consider, regionalization of certain assets in the portfolio? Maybe you can think about from Asia Pacific or the Middle East, or just short to Europe, or across, Pacific Oceans. So you have a lot of choices. But anyway, you need to diversify your assets geographically. Meanwhile, you need also diversify your assets in currencies, denomination. I would say, it would be wise, but it's a panic. It can be very agony, to diversify, US dollar denominated assets to other currencies for a time, because anyway, US dollar is still very strong. But you make some choices, short term, medium term, long term. So I think that would be the, some critical factors we, strategically.
Thank you, Stephen. Pankaj?
Yeah, I think we are sitting in the warm glow of 5 years of amazing markets, right? Since COVID, containers have had a run for 5 years. Dry bulk has had an amazing run. Tankers have made amazing amount of money for the last 3 years. And we're about to enter a period where volatility is going to be very, very high. We are in the middle of 2 wars. It seems like nothing's happening over here, but we have 2 wars ongoing. We have President-elect Trump coming in. And the volatility in the tanker markets is going to go through the roof in the next couple of months. We can already see volatility in dry cargo. And if the Red Sea opens up, I can see a huge drop-off in the container markets coming as well. So this also obviously offers opportunity. If you have deep pockets, it's going to be a good time to start buying assets. We've already seen a 20% drop-off in bulk carrier values in certain segments. We are starting to see a drop-off in tanker values. But of course, it also comes with challenges. So I think we go back to the basics. The people who have deep pockets, who have made a lot of money, who have been wise in their investments, have not overextended themselves, have financed their new buildings, will be able to use this time to grow their companies and expand further. People who have extended themselves too much, have too much leverage at high values, will get into trouble again. It's surprising how we go through every cycle where everybody thinks that markets can never go up. And when we are in the up cycle, they think markets will never go down. Both things happen periodically. And I think we will start to see more of that happening very, very soon.
Yes, I think it's very interesting. I think timing has always been, people talk about timing a lot, but it's actually very difficult to grasp the exact right timing. And then I think I want to maybe ask each of you one more question. Maybe Kenneth, because you mentioned the cooperation with CCON, there's actually a high-profile transaction in the market. Everybody hear about it. Can you maybe share some of the experience you get in this transaction, and basically how this strategic alliance, basically what do you see the future of this strategic alliance?
Well, on that point, I think I touched upon it a bit that that they are in shipping because starting the route in the ship management, and we are in shipping because we believe that we can provide efficient capital and bind all the resources together. Because of all the challenges that that we have in terms of driving businesses, in terms of getting the right capital, doing the right deals at the right time. We just need more parties, to work together to understand what's going on, and also echoing, what has just been discussed. Going back to fundamentals. Shipping market, we would always from time to time have our good times because of disruption, because of various factors. But it has always been oversupply that would drive the market down. That oversupply situation, I started shipping 30 odd years ago, and the oversupply situation has persisted until until 2008, when we started, to have the correction, and it has taken like almost a dozen years to realize that, the excess capacity, has been absorbed. 2-3 years ago, we have like the historically low order book, and now the order book, look still low, but not that low anymore. And thanks to ESG. People still cannot build, a lot of ships at the moment because those decisions are very difficult to make. But mark my words, one day when we see the right view, people will rush on into doing it. So I think I would just go back to fundamental. Is we have, in this changing world, geopolitics. There will always be geopolitics, and there will always be new regulations. To be able to do the right deals at the right time, we have to be flexible. And in this world, we have to combine our resources, our expertise together to make sure that we make the right decisions. Make the world smaller, and let's work together.
Yes, I see. It's very important to get the right partner on the right project. And Stephen, maybe you can share with us, perhaps for your organization, what are the recent opportunities that you are pursuing, and what do you see, how those opportunities fit with the trend, as we discussed just now?
Well, actually, Equator Fund is still very young. We have this. We start to manage this industry policy funds 2 years ago, so we are still. We're still on the stage of fundraise. Simultaneously, we are investing. So, of course, there are certain doctrines actually we follow. Something. As I say, we see the opportunity of new energy. So the carriers, also some bunkering. For clean and green energies like methanol or ammonia, something. So we see to the future. Meanwhile, we are also focusing on the certain, attention on passenger carriers, like cruises, also some, electricity powered, passenger vessels, short distance, that kind of things. So to us, we think, in China actually is revitalizing quickly, and we know, for cargo traveling, is definitely the oversupply situation. If you see the order book, Clarkson just issued, a couple of months ago, it's crazy. It's if I can remember, it's for the first 9 months, this year, and the total new order book already surpassed, the total amount of the last couple of years combined. So it's crazy. It's crazy. We smell something. Do you smell something, similar? But it's going wrong. Yeah, I understand still a lot of people are enthusiastic about the market and freight, but we need to be very careful. That's why we see. But from China's point of view, we see the cargo traveling, vessels is really developed. But passenger vessels, we still think a lot of room to develop. So that's why the passenger vessels we will be very concerned about, and also pay much attention to. What else? Also we are looking to some offshore platform. As we see, we are going to have one of the largest offshore platform for wings installment that kind of vessel. So it's going to be ready mid next year. So I think that would be some opportunities we're looking at. Of course, I think we're luckily located in Shenzhen, so around us there are a lot of these new innovators. Something we are also looking into some new technology. Incubator, incubating them, and for shipping assets purpose. So basically, we have 4 basic lines of focuses for the time being. Yeah.
Thank you. Thank you. Pankaj, very quickly, because you mentioned that M&A actually plays an important role in your growth. Could you maybe share just one challenges that you overcome in the M&A projects that you have done and that you manage?
Yeah, I mean, through my career, I've done a couple of different deals on M&A. The main thing around M&A is integration. So you have to be very clear in your purpose of acquiring a company. It's very easy to acquire assets. It's very difficult to acquire organizations, and then to turn those organizations to useful, productive, synergistic acquisitions. So the main time that you spend after acquisitions should be on integration and making sure that you repurpose the organization to doing what you needed it to do. So that's where I've spent my time most of this year. I've been coming to Hong Kong 3, 4, 5 times now to make sure that the organization is headed in the right direction. So I think integration is a key issue for M&A.
Great, thank you. And I hope as Kenneth mentioned, we actually have a lot of professional resources to support projects like a joint venture M&A in Hong Kong, and hopefully it will also contribute to our success. Okay. I see the clock is already, we use up all the time. Thanks a lot for all the panelists for the very insightful discussion. Thank you.